Thank you everyone for joining today's webinar. We are delighted to have you with us. In today's webinar, we will go over some insightful research on the Southwest London. And this section is going to be presented by Gabby Ford from our research team based out of London headquarters. Gabby's session will be followed by mine. I lead the international desk here at Savills India and will cover remittances and financing of international properties. At the end, we have Jen from our London sales team. She will cover some very exciting developments in Southwest London. Jen is again based out of our London headquarters, and she's an expert in international sales. So without further ado, I'll pass on to Gabby to cover the research.
Great, thanks very much, Dhruva, and hi everyone. I'm Gabby Ford from the residential research team at Savills, and I'm going to give a quick update on the London housing market with a particular focus on Southwest London. So just to start by putting Southwest London into context of the wider London market, here we're looking at the average value of homes across London. The highest value homes are in the darkest red, so you can see they are concentrated in the centre of London around the Thames, but there is then a wealth corridor that stretches throughout the southwest of London. And generally, Southwest London is seen to be a very desirable market because, as you can see here, it is dominated by green space with the likes of Battersea Park, Clapham Common, Kew Gardens, Bushy Park, and of course, London's largest green space, Richmond Park, which is almost 2,500 acres. So moving on, when we actually break down those average values into a bit more detail, the southwest of London is actually a pretty reasonable market to invest into. So the average values across the different southwest boroughs and even those on the north side of the Thames in West London are considerably less expensive than your central London boroughs like Westminster and Kensington and Chelsea, where the average value is over £2 million. And that does, of course, mean that you generally see a stronger yield in Southwest London too, at an average of 3.4% compared to 2.8% in central London. And now, in terms of how the market has performed, we've seen that Southwest London has consistently outperformed central London. So whilst central London is only just seeing recovery after a number of years of price falls caused by tax changes to the top end and, of course, economic uncertainty from Brexit, Southwest London has actually been performing well for a couple of years. And actually, throughout the pandemic, Southwest London has been very strong. And that's because it is already a strong domestic market. So it hasn't struggled with a lack of international buyer like central London. And of course, that draw of green space in the area has proved very popular with buyers. So in the last year, prices in the southwest have increased by 5% compared to just 1.4% in central London. But moving on, it's interesting that we are starting to see demand for city centre living coming back. So our most recent survey that we did with our buyers found that whilst in June, a net balance of minus 21% were saying that a city centre was attractive to them as a place to live, that has now flipped to show a balance of plus 23% wanting city centre living. And that has, of course, coincided with a return to more office working for many and retail and hospitality opening up more in central London with the easing of social distancing. But we are still seeing almost half of buyers still looking for that all-important outside space. So we do think that markets like Southwest London, which have access to so many parks, are likely to continue to perform well in the future. And now, what about London's future after the pandemic and, of course, Brexit? Well, we do think that there are a number of reasons that remain as to why people continue to invest in London. So we haven't seen a significant economic crash after Brexit. And the fact that we've been able to sign trade deals and are negotiating more does suggest that London will still be able to compete globally. Likewise, fears of significant job losses in the wake of Brexit didn't really materialise. Instead, we have continued to see significant investment from firms like Google signing for a new £1 billion office in King's Cross, and major tech firms like Netflix and TikTok have also signed leases for new headquarters in London within the last year. And the UK has also been one of the leading nations in the rollout of the COVID-19 vaccine and has relaxed social distancing measures. And actually, we think that London is pretty well placed to adapt to the new normal, where there is that greater emphasis on well-being and particularly green space. So just under half of London space is considered green, with over 3,000 parks, and the southwest of London is particularly green, as I've covered. In comparison, it's thought that only about 27% of New York is green space and less than 10% of Paris. And then finally, Brexit and the COVID-19 pandemic, whilst obviously providing some short-term hurdles to overcome, have done nothing to change London's standing as a safe long-term investment. So the culture, the heritage, the secure financial and political institutions, the language, and even the time zone still remain fundamental reasons why people look to invest in London. And just moving on, a really key driver for buyers is the educational offering that's in London. So there are 4 universities in London which are ranked in the top 50 in the World University Rankings, and no other city can boast more than this. And not only does that act as a significant draw for overseas students to come and study in the capital, but of course it also provides a world-class pool of student graduates for London businesses. And we found that international buyers haven't been put off by the disruption caused by the pandemic. So the number of international UCAS applicants from outside of the EU has reached record levels in 2021 and actually increased by 17% compared to 2020. And now, despite the changes that we've seen in the UK to tax, it still does remain significantly less expensive to invest in London as an overseas buyer than elsewhere in the world. So if you compare the costs of buying a property, holding it for 5 years and then selling it, London's comparative transaction costs are a lot cheaper than the likes of Hong Kong, Singapore, Mumbai, and New York, amongst others. So bearing that all in mind, what do we think will happen in the prime London market going forward? Well, we think the central London market is on the cusp of recovery after a number of years of weakness. So we do expect to see a bit of a bounce next year, particularly if we see more international buyers return to the market after COVID restrictions. The prime outer London market, which includes the southwest, has generally performed much more strongly over the last few years, so does have less ground to make up. But we do expect to see continued strong growth, particularly in 2022. Beyond that, we expect to return to trend level growth, and there may be slightly lower growth in 2024 if we see another general election, which we know can always just bring a bit of uncertainty with it. Interest rates are expected to rise over the next few years, so that could slightly limit price growth in the more domestic outer London market, which is more reliant on mortgage debt rather than cash. But overall, in the next 5 years, we're forecasting strong capital value growth of almost 24% in central London and almost 14% in outer prime London. So that's all from me. I will now pass back to Dhruva. Thank you.
Thank you, Gabby. Thanks for going over the latest research snippets. Over today's session, I will go over and cover some possible ways to finance an international property purchase, and also on the possibilities of financing such international purchases. So if you're an Indian national who's a resident of India, where majority the population would really sit, what are the options to fund an overseas investment? Well, This slide really talks about that one way to use and finance such a purchase is to use the RFC account, which is basically a resident foreign currency account. So an example of that would be if you've ever worked overseas in the past and have funds in the RFC account, you're permitted to use these funds to finance the purchase. But however, the more well-known route is via the liberalized remittance scheme, often is just referred to as the LRS. The LRS basically has four main features. There's a limit on remittances that can be made in any given year, which the cap is at 250,000 USD. The year is defined from 1st April to 31st March, and hence it's totally possible to send or remit 250,000 USD on March 31st and follow this up on 1st of April of the same year. The other feature here is that the scheme is not available for corporates, trusts, Hindu undivided families, or partnerships. Next, which is definitely an attractive point about the scheme, is that the funds can be separately remitted by minors and family members. So family of 4 can remit altogether, aggregate and remit 1 million USD in any financial year. Also, the scheme allows clubbing of funds, which means that the funds which are remitted, the minors and family members can be clubbed together to buy one single property. Now, there is the only restriction in that case is that they have to be joint owners of this single property. Next, coming on to the financing options for Indian nationals and residents of India, it's rather important to note that there is no option to finance debt overseas, as this is something which is clearly prohibited by FEMA under the FEMA guidelines, which are issued by the RBI. Now, some clients do want to understand if they can take a loan in India to purchase an international property. So the simple and the straightforward answer to that is that it is yes, totally possible. Debt raised in India is out of the purview, FEMA's purview. So it's totally permissible. But now, is it pragmatic? The answer is not that straightforward. Firstly, because interest rate charge will not be as low as compared to interest rates which apply overseas. And secondly, the cap of $250,000 per year per individual would still apply. Well, this slide talks about the regulations for foreign-owned subsidiary or joint venture of Indian corporates, and is only applicable if, let's suppose you are a promoter of an Indian corporate which has a foreign subsidiary or a joint venture overseas. Under this category, an investment is made in the real estate asset by the subsidiary or JV of the Indian corporate. So the financing option, there is a financing option here. Debt can be taken by the subsidiary or the JV overseas. The Indian company can create a security for the same within the total financial commitment limit. There are rules and limits as to how the financial commitment is calculated. So the key rules, one needs to follow are that the financial commitment of the Indian corporate cannot exceed 400% of the Indian company's net worth. Next, the other rule is that the foreign subsidiary should have a bona fide business activity. It cannot be just a shell company overseas which is holding these real estate assets. And lastly, they should not make direct investments in RE or banking sectors. So I'll just elaborate on this. Here, FEMA goes ahead and defines what it defines as real estate. Real estate is defined as regular buying and selling of real estate or trading of transferable development rights, also known as TDRs. So if the Indian corporate is buying an international asset in their foreign subsidiary for official purpose, and in a sense, the asset is going to be used by the employees of the company, it is totally legal. So there are ways to finance international asset which are totally legal, but obviously the route is not LRS, it is through the ODI route, which was this slide. I would like to end my presentation on that note, and we are also not legal experts on remittances, on mortgages, but we have a panel of best-in-class financial consultants and legal advisors with whom we are happy to make introductions. Hope you found this useful. Over to Jen to now cover some exciting developments in Southwest London.
Hi, everybody. Thank you so much for listening in today. My name is Genevieve Mayo. I'm based in London and I work in the International New Homes team. We are currently selling about 18 new build schemes across Southwest London. And in this presentation, we'll be focusing on just 4 that have received particularly strong interest from the international markets overseas. So starting with Embassy Gardens, it's a development by Eco World and Ballymore, located in Nine Elms, which is one of the biggest transformations in London, Embassy Gardens being very much in the heart of it all. You may be familiar with this area, as you can see on the slide there, which is the home to the new US Embassy, also with the new Nine Elms Underground Station, which is the first major addition to the Tube to open in London since 1991. It is also very close proximity to Battersea Power Station, Vauxhall, and Battersea Park and London Victoria. So in terms of connectivity, it's extremely well positioned in London. Embassy Gardens comprises of 1, 2, and 3 bedroom apartments. Its best in quality reputation and previous sales successes have carried on through to the final phase that we're selling at the moment, called the Modern. Remaining prices are now from $925,000, with final completions planned for Q1 next year. So there is already completed stock, and the last completions will be in Q1 next year. So if you're looking for something that has completed already or is nearing completion, Embassy Gardens is very much something for you to look out for. Designed by award-winning architects taking inspiration from New York's Manhattan meatpacking district, and as you can see on the image of the screen, London's first sky pool. Now, this is spanning between the 2 legacy buildings. The sky pool has received a really positive effect on the market, with plenty of photos, videos, and media coverage from the residents. As a result of this, the lettings inquiries have jumped up by 25% during 2021. Really demonstrating the demand of completed and completing product to not only the owner-occupier market, but also the tenant market. In this slide, you can see the amenities that are on offer. They are truly exceptional. They're now completed and operational, and therefore it is really a completed product. The Modern has been designed to provide a different look and feel to many other developments, attracting a very younger demographic with the exceptional co-working spaces and encouraging a very large community feel. It almost feels like a bit of a private members club. You can see there the sky pool, there's 24-hour concierge, cinema, residence gym, rooftop bar and restaurant, business centre, health spa, and my favorite, the Orangery. Now, as you can see on the top of this map, there is a very established sense of community already. There's supermarkets, shops, and a real buzz of restaurants. It is becoming a real destination for neighbouring suburbs. This really is an attractive investment opportunity with rental renewal rates at 100% for properties in Embassy Gardens. No other scheme in London has had this success in terms of rental consistency, I'd say. It really is one of the best-selling developments in London over the past 12 months. So it's an absolute privilege to be a part of it. So we're now moving slightly more west to Riverside Quarter, a completed development that sits in Zone 2, right on the banks of the River Thames between Wandsworth and Putney. There are several forms of public transport that you can see close by, including a river taxi, tube, bus, and residents have their own shuttle bus that transfers them between Putney Mainline and tube stations. So this very much is one of those developments that has pretty much every form of public transport available to the residents' needs. The last phase has now completed, with all apartments benefiting from either views of the Thames or of the communal gardens. There are local restaurants and cafes nearby. The area is alive. The development is situated close to many open spaces and green parks that Gabby mentioned earlier, with Wandsworth Park just a hop over the river and the Hurlingham Club. The remaining apartments are from 645,000, and the majority of these are being 2 beds. In this slide, you can see there are beautiful residence amenities. You can see there the image on the right. The residence pool has incredible views over the River Thames. Imagine doing your swimming, your laps, and after every stroke you see, you're looking onto the famous River Thames, one of the most iconic rivers in the world. As I mentioned before, there's a complimentary shuttle bus, there's 24-hour concierge, residence gyms, and it's very much worth me mentioning here, there's such a huge amenity offering, and whether it's the daily porter services or the spectacular pool, the beautiful gardens that I'll show you on a map shortly, we have had previous tenants end up purchasing at Riverside Quarter purely on the basis of their experience and the community life that they've had whilst renting at Riverside Quarter. Now, as you can see on this slide that I mentioned, it's an incredible river face development. And in between all of the buildings, you can see the vast amount of green spaces. Now, Gabby also did mention this before. This is very much a huge driver to buyers and tenants, decisions these days. So with a plethora of green space on your doorstep, this is very much a beautiful development if that's what your buyers are looking for. Now, it's a real community offering, a safe and friendly environment, and it's very well looked after, managed by the developers themselves, Fraser Property Group. Savills have been the sole agent for all of the phases for Riverside Quarter, and can proudly say that the rentals are averaging at a 3.7% yield, which is in line with Southwest yields there. So, there's been real evidence that there's been tenants purchasing here at Riverside Quarter, as well as repeat buyers buying multiple properties within the scheme. Moving slightly up the west, we are heading towards Kings Road Park here. It's situated in Zone 2, which is in Fulham, neighbouring very quintessential London areas such as Chelsea and Kensington. It's just 60 metres from the Kings Road, which you really don't get more than Chelsea than that. You may be familiar with the Chelsea Football Club, which is just located moments away, as well as nearby the River Thames. It's important to mention that it's under 10 minutes walk from Fulham Broadway Station and Imperial Wharf Station, meaning you can get a train to Clapham Junction in 5 minutes and Westfield Shopping Centre in 7. Now you can see this beautiful image of the exterior of Kings Road Park here. It's set within 6 acres of beautiful landscaping and is one of the largest developments for the globally recognised development company Berkeley Homes. There are 1, 2, 3 and 4 bedroom apartments available, and at the moment they're from £700,000. As you can see from the figures on the top left-hand corner, it has been incredibly successful with a very equal mix of owner-occupiers and investors, hungry for a development of this standard. This whole phase will be completed in 2024 with future phases to come, and we are currently estimating yields of 3%. Not often do you find a regeneration scheme this large in the heart of Southwest London, and I really think this is the reason why Berkeley Homes has had the opportunity to put such a large surface space of residence amenities onto this standard. We have the 24-hour concierge, 25-metre swimming pool, vitality pool, which you can see there in the bottom right-hand corner, gym with 2 fitness studios, treatment rooms, steam room, sauna. There's residence lounges, private self-service bar and workspace, private dining rooms. The list goes on. Cinema, golf simulator. There's so much, and like I said before with Embassy Gardens, it's really setting the standard. I personally just live minutes away from this development and can say what an absolutely beautiful area it is to live in. Now we are moving on to the Westmont. This is the last scheme that we'll be discussing today. It has been a very successful scheme this year. You may already be familiar with White City Living by Berkeley Homes. So we released the most recent phase of this. It's called the Westmont. Right on your doorstep is Europe's largest shopping centre, Westfield, home to over 300 stores, including a luxury village that is home to many of the world's finest brands and over 60 restaurants and bars and 20 state-of-the-art cinema screens. You can see here that we're very close proximity to Notting Hill, Holland Park, and the famous Hyde Park itself. The connectivity is, arguably one of the best in Southwest London, with so many different ports of transport to take you to any area of London. The Westmont features an extensive collection of unique luxury amenities. This year, Savills launched the Westmont in September, and it has been hugely successful. Consequently, there is a strong rental demand with a waiting list of tenants wanting to live at Westmont, White City Living. It's comprising of 528 new homes, 1s, 2s, and 3 bedrooms, currently starting from 665,000. Adjacent from the White City Underground station, it is incredibly well connected, and you'll be able to be in central London in just moments. That the Westmont features an extensive collection of luxury amenities. The thing that really sets it aside from many other developments in the UK is the Westmont's very own Mediterranean inspired beach club, exclusively for residents only. It's a southwestern facing beach with an infinity pool, terrace, bar, and even olive groves, which will make the rooftop of this development so special. And if we move on, you can see that not only is the Westmont neighbouring some of the most affluent neighbourhoods of London that I mentioned earlier, but residents will also be in prime location for some of London's best universities and schools, including an entrance directly from the development to the neighbouring new 23-acre, $3 billion Imperial College campus being delivered. So this really is one for, buyers driven by education. Just to let you know, this has been one of the best-selling schemes for Savills this year. So to finish up, to echo what Gabby has said, Southwest London has consistently outperformed Central London with positive and consistent growth, seeing yields of 3.4%. Now, we've recently released our autumn-winter property portfolio, which you can see on the screen right now, showcasing a very extensive range of all the developments that we sell across London. Please do make contact with Dhruva and the rest of our Savills India team, who can send you a digital copy of this portfolio. You can see the developments that we've talked about today, other Southwest schemes, and all around London. It's very much a great opportunity for you to understand that Savills are selling developments of all different price points, completion dates, and buyers' offerings.
Thank you, everyone, for sparing time for today's webinar. We have certainly found this session helpful and will have questions for us. To address these, we will have a follow-up, shorter session to answer your queries. So please feel free to reach out to us with your questions. Again, thank you for your time today, and we look forward to helping you find your home in the UK. Thank you.